Hello everyone, welcome to my channel. I am Kritika Karpaswamy, enrolled GST practitioner. In today's video, we are going to understand the most common mistakes in GSTR1 filing and how they affect your input tax credit, which is known as ITC. Don't worry, this video is explained in very simple language so anyone can understand it. Let's get started. What is GSTR1? GSTR1 is a monthly or quarterly return where business report their sales details to the government. In simple words, GSTR1 is equal to report of your sales. If you make mistakes in this return, your customer may lose ITC and you may face notices or penalties. So, the top mistakes in GSTR1 filing. Mistake 1. Not starting a new invoice series. Every financial year starts on 1st April. You must begin a new invoice series. Here, the mistake is most of us are continuing the last year's invoice numbers. If you continue with old series of last financial year, the consequences are non-compliance with GST rules and audit and assessment difficulties and reconciliation problems which causes mismatch and confusion in accounting and record keeping and risk of duplicate invoice numbers and invoice with e-invoicing systems and departmental notices and penalties. So the correct practice is we have to start a new invoice series like INV-2026-0001. Instead of hyphen, we can use like slash or underscore 2 or use financial year in numbering like FY 26-27-0001. If you have two businesses in same state and both have separate GST registration, you should maintain a unique sequences for each GST identification number like BRO1 slash 2026-001 to differentiate them. Or you can use area subform where the register office is located. So the new financial year means new invoice series. Click 2. Entering the wrong GST identification number. If you enter the wrong GST identification number, your customer cannot claim ITC. Here, the mistake is making errors while typing in invoices or while filing GSTR1 return. This seemingly small error, but it can lead to significant compliance issues. The impact of entering the wrong GST identification number are invoices are not reflected in IMS system, so it will not reflected in GSTR2B until acceptance in IMS system. Hence, buyer cannot claim ITC. So, the correct practice is always double check before issuing the invoices or before filing your GSTR1 return. Mistake 3. Selecting B2B instead of B2C or vice versa. Choosing the wrong category creates confusion. B2B means sales to registered business and B2C means sales to consumers. Here, the mistake is while filing your GSTR1 return, reporting a sales in wrong category. This can block ITC, create mismatches, and lead to GST notices. So, always classify your sales correctly. And this mistake can be amended in your next filing month or it can be amended in same month by way of GSTR1 rule. That is, before filing your GSTR3B return. So the correct practice is select the correct option while filing GSTR1. Mistake 4. Using the wrong GST rate or HSN code or SAC. Incorrect tax rates can lead to penalties and notices. Here, the mistake is choosing wrong GST rate or choosing wrong HSN code, which leads to wrong GST rate applicability. Incorrect GST rate results in short payment of tax, which may attract interest and penalties later. Incorrect HSN or SAC code results in incorrect tax classification and possible departmental notices. Hence, correct rate means correct compliances. Mistake 5. Delay in reporting credit notes and exports. If you issue a credit note or export goods, report them on time. Here, the mistake is reporting them late. What is credit note? Credit note is issued when goods are returned by the customer, the invoice value is reduced, or extra or excess tax was charged. It helps in reducing the tax liability. But if a credit note is not reported on time in GSTR 1, you cannot reduce your GST liability. You may end up paying extra tax. It may cause mismatches during audits. What are export supplies? Exports are zero rated supplies, meaning GST rate is 0% and you are eligible to claim a refund of ITC, which is input tax credit. If you report exports late, delay in GST refunds, working capital gets blocked, mismatch with shipping bill and ICE gate data, possible scrutiny from the GST department. So, credit note delay, loss of tax adjustments, export delay, delay in refund. Hence, declare them promptly in GSTR 1. Timely reporting avoids penalties and ensures refund. By avoiding these common mistakes in GSTR 1, you can ensure proper GST compliance, avoid ITC loss for your customers, and prevent notices from the department. Always remember accurate data, timely reporting, and proper reviews are the keys to error free GST filing. Get in touch with us for GST registration, GST and IT return filing services at affordable prices. So contact us today. Do subscribe, like and share and follow us for more GST videos.